Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be giving you the exact point at which you should stop buying Bitcoin. In last week's video, I covered an important topic of how 90% of people in this space are going to lose money and how you can avoid it. So to continue that theme, it begs the question that at what point should you then stop buying Bitcoin in order to stop yourself from losing and being in the camp of the 90%. So I'm going to be exploring that. I'll have a look at exactly what's going on in the background of Bitcoin in terms of the wider markets, in terms of the news, and as usual, the 60-day cycle to see exactly where Bitcoin's going in the next few days and weeks. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so in last week's video, I covered this particular topic, which went down very, very well in terms of the number of views that I got. It was a lot more views than I normally get. And that topic was how 90% of people will lose in this Bitcoin bull market and how you can easily avoid it. So of course, this begs the question, at what point should you stop buying Bitcoin in order to avoid being in this 90%? And this whole topic of when to get in and when to get out and how the cycles work is really based on this Wall Street cheat sheet. And this is the psychology of how a market cycle operates. And that is basically, we go through these emotions here from the bottom of the market where we've just had a bear market here. So when the bull market does start, anywhere around here, there is disbelief. And as this market moves up, people just don't get on board simply because they don't believe that this is a proper rally. And then a little bit of hope builds up here. And then you get these little corrections which actually dash your hopes. So once again, not many people get on board. But as the market slowly rises, with these higher lows here and the higher highs, a bit of optimism starts building up. And this is where a lot of the people will start to think about getting on board, where they believe that this rally is really real. But because they've been conditioned to have all these big corrections along the way down here, they still don't get on board until they get to this point. This is where the retailers start to come on board, by which time you've lost 70% of the gain of the bull market. So last week, I was explaining that we're now in the parabolic move, which is this bit here, that we're really right at the top here, where the market is now in a belief stage. And this is where most people will start to trickle in, with the retailers getting in around about here, where they see their money's double and treble, then they start maxing their credit cards, borrowing more money, telling their friends, everybody's getting on board. But the people who got on board here, down here, they're the ones who are in the biggest profit at this point. And they'll get to a point based on technical indicators of when to just get out. And when they do, there is a sudden fall in the market. So anybody who gets in after this point here will be in the loss position and they won't be able to get out of the market. This is the trap. And this is the trap that 90% of people will get into. And you really do need to avoid that. So the question is, what is this point that you mustn't be buying Bitcoin, which would then increase the average price that you get in? So if you got in down here, if you keep on getting up here, you're going to be increasing the average price that you've actually bought Bitcoin, or the altcoins or the Bitcoin miners, whatever you're interested in. So I'm going to go through that particular point of the exact point to stop buying Bitcoin and to give yourself the best chance of at least making a profit once the market tops out. And to do that, I'm going to put on the pi cycle and go through how cycle by cycle, this pi cycle would have saved you in terms of not having to ride the bear market down at the end of the bull market. So starting off with the first cycle, where it topped out at the end of 2013, this is where we broke up. Before the top was reached, you can see that the pi cycle lines, the green and the red lines, and people always ask me about the settings. The inputs for these two lines are 350 simple moving average, which is the red line, the slower moving average, and the green line is the 111 faster moving average. And these are the ones that have been ticked on the style. So you can see from this particular chart, before we got to the top of the bull market, you can see how steep this is here. This is giving us a clue that after a certain point, you should just ride the profits rather than average up your cost price. And that is the red line here. So if we have a close look at this point here in the chart, once the price gets above the red line of the pi cycle, from then onwards is the greatest gain that you're going to be getting in this bull market. And this is what you really need to capture. Once the price gets up here, you don't want to be adding here because you're just increasing your average, because when the price falls suddenly down to this level here, you can see this came all the way back down here within a few weeks. So if I put a horizontal line here, you can see that anybody who added in at this point or this point, anywhere around here, after this red line, once this starts coming down, you're going to be in a loss, and it's going to be very difficult to exit the market because you want the market to go up. But what happens is, if you then zoom out, you see that you get into a much wider bear market, and then you have to just ride this down, and you really don't want to be doing that. So to avoid that, those people who stopped buying here and rode this up, even when the price came down to this level and you recognize that the market has now topped out, you would still be able to gain this profit by that point. So it's easier to get out here knowing that you've made a profit than the people who get trapped up here. And this is what you need to avoid, because once you're making a loss here, it's very difficult to get out of the market. And if we move to the second cycle, exactly the same thing happened here. You can see that the fractals are very similar in each of these cycles because they end up rhyming with the previous cycles. So once again here, once we broke up above the previous all-time highs on this line here at around $1,200, and this was at the beginning of 2017, once the price went above the red line, if you'd stopped buying at that point, you would have been able to ride all of this until the end of the bull market. And when the sudden fall in the market comes and people are not aware that we've topped out here, if you put a line across there, then everybody who bought up to the red line here, you would still have gained this amount of profits. And at this point, when you realize that the market is now topped out at this point of the 20,000, it would be easier to get out and not have to ride this down. And this went all the way down to 3,000. Moving on to the previous cycle back in 2021, when we topped out at 69,000 here. Obviously we had two tops. One was at 64 in April. But if you'd have stopped buying at this point of the red line, where the price crossed above the red line of the pi cycle, and as we saw, not many people recognized the 64 as the top or the 69 as the top. And before anybody recognized that we were in the bear market, whether it was here for some people or over here at this point, so if you put a line across there, anybody who bought up to the red line would still be at this point be in a profit here, and that would make it easier for you to exit the market at a profit and not have to ride this down all the way down to 15,000. And all those people who started adding in more and more at this point, they're the ones who got trapped in this topping out process here. So this is what you really have to avoid, and this is the point of the red line. This is a very good marker. This is the line in the sand. At this point, just make a decision not to add any more in order to prevent yourself from dollar cost averaging at higher prices. So here we are now in the current cycle, and as you can see quite clearly that people still have a wonderful opportunity to add into Bitcoin or the altcoins or the Bitcoin miners from where we are currently to the red line here. And the red line at the moment is around about the 125,000. So once we get above this red line here, that is your cue to stop buying and dollar cost averaging at higher prices from there on. So if the cycles were to continue to follow what's happened in the past, so basing our narrative on the historical perspective, this would be the ideal time up to this point where you just stop buying and then ride this as much as you can. And our narrative at the moment, based on the previous historical perspective, which we've had a look at over the last few videos, so if you haven't watched those, because those who have been following our channel here will know that based on what's happened in the past, the narrative is that this current cycle is going to be topping out anywhere around September or October 2025. So we've got some information that from where we are currently, to where we're going to top out, we need to really just capture this rest of the bull market here. And the way to maximize that amount of profit is to make sure that you don't dollar cost average above this line, so that when we get into the bear market and there is a sudden fall like here, and some people will recognize where the top is, and we have our Bexit indicators to guide us with that. But should anybody miss that top and only realize it when the market comes down to these levels, then if you take the line across there, you'll still be able to walk away with a smile on your face by capturing at least this amount of profit and not get trapped by the prices as it gets around here. So this is where the retailers will be buying, but the smart investors would have stopped at this point here. So I hope you find that as a good guideline. You can use other guidelines if you want to. I'm just giving you my perspective of where in the past it's always been a very good point at which to stop buying into the Bitcoin miners, into the altcoins, into Bitcoin. Okay, moving on to the news out there that we should really be aware of. And of course, we've just had the monthly candle close on Saturday. And that candle close, as we'll have a look at very shortly, is where the Bitcoin smashed its record with the biggest ever 26,000 monthly Bitcoin price gain. So we can see quite clearly Bitcoin's going into a new phase. We call it the parabolic phase, but many people call it the final phase of this bull market. And all the signs are that this is where we're at the moment. And something interesting down here as well is that Michael Saylor is telling Microsoft that its value could soar 5 trillion with Bitcoin. And that's to do with the board of Microsoft in the middle of making a decision whether to hold Bitcoin as its treasury, as a hedge against inflation and recession. So what we need to have a look at is exactly the range of prices that Bitcoin is likely to be ranging between over the coming days and weeks. And for that, we've got to have a look at the liquidation heat map. This is where the leverage players have got their stop losses. So on the lower side here, prices around about the 94,200. And on the top side, we're right up at the 98,500. So what we should see is the price coming back down, taking out these stop losses down here before moving to higher prices. And as I'm doing this video, we're down to 95,000. And in order to gauge and measure the amount of demand that is out there, we can look at one reference point here, and that is the Bitcoin ETF overview, where we have a look at the asset inflows and outflows. And as we've seen over the last few weeks, as the price has been driven up to nearly the $100,000, the amount of Bitcoin inflows into these ETFs here have been absolutely unprecedented. So if we take BlackRock, their ETF IBIT, they're still powering ahead. They had record levels in the last few weeks, and they continue to have an incredible amount of inflows. This time in the last 7 days, they've had over 4,000 Bitcoin inflows. And what we've seen with Grayscale, where they were bleeding quite a lot of the Bitcoins, they've now started to take some profits here. So we're seeing a lot of outflows one more time. But if you look at the overall ETF picture here, you'll see that there is still unprecedented demand with a lot more green rather than the red. So a lot more inflows than outflows. So the picture is looking quite rosy with Bitcoin going forward. And in order to judge the conditions for the current bull market with Bitcoin, we have to really look at the dollar, because we know that the dollar has an inverse relationship with the wider markets. And when we expect the dollar to be coming down, we expect the wider markets to be going up, and vice versa. But on many occasions, we do get this unprecedented type of situation where the dollar goes up, as well as the wider markets are also going up. But what we've now got is that the dollar has now come up to a resistance point, which we highlighted last week. And what we've seen is that the dollar has now turned around at exactly that point there. And that is at exactly 107. It reached a high of 108. And the situation we really need to be aware of is that we have this trend line from the top here at around about 107, falling down to these levels. And it may well be that the dollar comes back and retests this and then has a bounce back up one more time to these levels. But should it fall below this line, then really it's going to be in a bit of a free fall back to these levels here, and even down to these levels that are below the 100. So certainly the dollar is looking much more weaker, which allows the wider markets more oxygen to go to the upside. And if we move on to gold, what we see here is a tweezer top candle close on the monthly time frame. So the November month wasn't able to make a new higher high, as we've seen with all of the previous monthly candles. So it looks like gold is in the process of having some sort of a consolidation around these levels, or even falling below these and creating some sort of a bull flag before powering ahead for the final leg. And very similarly, once again for silver, what we see is a wick at the top here. That means there's a rejection of higher prices, and that's now followed with a monthly close of a red candle, which has created a lower low from the previous candle. So this looks like that the trajectory seems to be to the downside for silver. And looking at SPX, this time I'm going to look at it on the monthly time frame to give you the overall bigger picture of what's exactly happening with the SPX. Because what we have is a trend line, and it's giving us a very strong clue as to how far the SPX will probably move over the coming 6 to 12 months. So our narrative here at the moment, as it stands, with the best possible information that we've been able to elicit and deduce from the markets on the Bitcoin chart, is that we're probably going to top off around about September, October in 2025. So if we put a marker with a vertical line here, so this green line is where we're expecting approximately where the markets are going to top out. And if you do a trend line going back to 2010 here, you can see that the tops of the market fit in quite nicely to where this may well be going. So it looks like, if you base it on this trend line here, that the SPX is going to be aiming for anywhere on this trend line in the coming weeks and months. So if it reached this point here, it would be around about the 7,500. So this is where this trend line would suggest we're going to be topping out with the SPX. So there's still quite a bit of room for the SPX to go up. Okay, moving on finally to the 60-day cycle for Bitcoin to ascertain exactly what seems to be happening and what we can expect in the coming days and weeks with Bitcoin. And that is that if you look at the current cycle now, we're on day 28. Currently today, Monday, the 2nd of December. The end of this cycle is going to be around the 3rd of January 2025. And currently we're coming into the midpoint, the 30th day, halfway through. And as we know, with the midpoint, we tend to always have a midpoint fall into the cycle before we make big moves to the upside, and then another fall into the end of the cycle like we've done in the past. So this is what we'd be expecting based on the historical perspective of how these cycles work. And the interesting thing with Bitcoin at the moment is that we've had an early fall into the mid-cycle, and we've had a bounce, which is a lower high. And just the way this is turning out at the moment, it would seem on a balance of probabilities that we're going to have one more fall into the midpoint. And as we mentioned in the last few videos, the correction I would expect would be either to the tops of these candles, which is exactly where it's actually bounced off from here, or the next lot is going to be at the bottom of this candle here, and that's at 85,000. Now, I'm not saying that this is going to happen, but there is a very good likelihood that if we do get a mid-cycle fall next couple of weeks, then this would be an ideal place for us to go back from the midpoint and create a right translated cycle from this point here. And if we do that, then it looks quite likely that we're going to finally break the 100,000 Bitcoin price somewhere in the next few weeks before the end of the cycle in the first week of January. So this is what I'm expecting. Since we're in the bull market, since we've broken out from the 73,000, you would expect a right translated cycle, which means that this time around, we should be breaking the 100,000 once we get past the midpoint in the next couple of days. And the alternative to that is obviously that if we don't have this mid-cycle fall, because we've already had one fall here, if we do decide to recover from this point and we break the 100,000 in the early part of the second part of this cycle, then we're really looking at much higher levels of where this is heading. But I want to have a look at the weekly close, because obviously yesterday Bitcoin closed on the weekly time frame, and what we have is a classic hangman candle in the middle here, which means that normally on a balance of probabilities, this is usually a bearish development at the top of a trend here. So on balance, you'd expect this next candle here, the weekly candle here this week, to be a red candle. So this is why the midpoint seems to be quite likely on a balance of probabilities to be coming back to lower levels. And the reason why I'm saying that the probabilities are to the higher side, but there is obviously quite a strong probability on the other side as well, because in a parabolic move, we've seen in the past that Bitcoin tends to ignore some of these bearish signals and leaves people behind who expect this to be the case. And the case in point is this one here, we'd risen very fast at this point, created this indecision candle, so it wasn't quite a hangman candle, and then instead of coming back down here, the Bitcoin price just left everybody behind when we came up to the 73,000. Further back in the previous parabolic move that we had back in 2020, if we look over here, we'll see quite a few examples of what happened in the past and how Bitcoin left people behind. This was a case in point here, where you would have expected a red candle at this point, but instead we powered ahead the next candle, created another Gravestone Doji candle here, and once again it just left everybody behind. So this is where the other side of the probability plays out. So these candles are around about the 60% to play to the downside, but as we've seen in the parabolic phase, they do have an increasing propensity to ignore the signals and for the Bitcoin price to power ahead. So let's see what happens this time around, but we just need to be aware of both sides of the coin. Okay, just moving on to the portfolio that we run here in the private section of this channel with the Bitcoin miners, and that is that we started off this trading portfolio back in January 2023 with $100,000, which has now gone on to 671,866, and that was on the close of play on Friday on the 29th of November. And since 2024, this is up by 54%. So during 2023, this had gone up to just over $400,000, and since the beginning of 2024, this has now gone on further by another 54% to 671,000. And our target for the end of this bull market with the Bitcoin miners, not with Bitcoin, is $5 million. And that would give us around about 45 to 50x from where we started at the beginning of 2023. And if you're wondering what this trading part of the portfolio is, these are what we call ratio trades between the miners. So what we do is to identify through looking at the ratio charts between the various miners and then moving our funds from one to the other, depending on the ratios here. And so far, from the beginning of January 2024 to currently, to the last trade we've done here on the 21st of November, we've done about 30 trades so far during 2024, and these are the profits. The profits are in the blue and the losses are in the red. So you can see quite clearly all of these ratio charts have given us an incredible success rate so far, and we're currently in 2 or 3 other ratio trades. So whenever the opportunity arises, I always let the members know on this message board before executing the trade. And we do 2 videos every week with the Bitcoin miners on the Wednesday and the Friday for anything that's relevant and important to both Bitcoin and the Bitcoin miners. And if you're interested in joining us, you'll have access to the membership tab here, where we do a market update every single day, Monday to Friday, at the end of trading hours, covering all the information that is relevant and important to Bitcoin, all the developments, all the charts, all the articles, in order to keep all the members up to date with what's going on. And if that's of interest to you, just to point out, you don't have to take part in any ratio trades. And indeed, half the members don't take part in the ratio trades, but they have a portfolio of the miners, which they've been riding up since the beginning of 2023. So if that's of interest to you, then all you have to do is below any of my videos, you've got the join button there, and also in the description box, you've got the red button here to join. And for the price of a coffee per week at £12.99, you can have access to all that. And always remember that there is nothing more expensive than a missed opportunity. So for the price of a coffee, you may well miss this wonderful opportunity that may well be presenting itself. Of course, nobody can guarantee that. What we want to do is to capture the potential that is quite clearly there. Okay, so I'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.